you're looking at your screen and it doesn't make any sense, or it only kind of makes sense, this video is going to bring you a ton of value. In today's lesson, we're going to learn all about candlestick types. Our previous video went over the basics of candlesticks. If you haven't watched it, I'll put a link in the description below. As we talked about in our last video, a candlestick represents what price did in a certain span of time. So what different candlesticks look like and the type of candlestick it is can tell us a lot about what price is doing. But a quick disclaimer before we start. It's great to understand what this particular candlestick can tell us, but outside of the full context of a chart, understanding support and resistance and different trends and whatever else could be going on, it's a pretty limited view. So don't do anything based off just one candle. We need to see if the market is trending or consolidating. We need to see levels of support and resistance and a bunch of other factors before we could even consider thinking about taking a trade. This is just step one, looking at the candlesticks. Don't worry, in later lessons, I'm going to explain what I mean when I say support and resistance, trending, consolidating. It's all going to make sense. But for now, we're still looking at single candlesticks. When we're talking about candlesticks, there's a spectrum. All of these definitions are kind of loose. I like to think of candles as kind of a range between very indecisive candles to candles that showcase a lot more momentum and more relative certainty in the market. When we're thinking about indecision candles, probably the most famous is the doji candle. A doji candle pretty much looks like a plus sign. The range between the top and the bottom is not very high, and the actual body of the candle is really skinny. What that tells us is that during that time frame, price stayed in a really narrow range, and the open price was very close to the close price. What that tells us is that neither buyers or sellers made a lot of headway. There are other types of doji candles. The gravestone doji has a really thin body at the very, very bottom of the candle and a really long wick going up. What that tells us is that price opened and buyers pushed the price way up, but then sellers were able to get the price down back to around where it started. This is still a fairly indecisive candle, but it does lean more bearish because the sellers were able to show some control. The dragonfly doji is the opposite. The body is at the very top and is also very thin, telling us that the open and close price were pretty similar. In this scenario, sellers were able to drive the price down, but then buyers were able to get the price to come back up close to the open. Similar to dojis, still a very indecisive candle, it's called a spinning top. Basically, it's a doji candle, but the body is a bit thicker. It means you have the wick at the top and the bottom, but it's just an in-between candle. The open and the close price are a little bit different, but there wasn't a strong movement here. This is still a really indecisive candle. Indecision candles could mean reversals, but that depends on a lot of context. So sometimes you'll hear these referred to as reversal indicators, but we need more information to really say. This next family, I usually call pin bar candles, but you'll also hear them referred to as hammers, reverse hammers, shooting stars, hanging man. It's all the same family. So the pin bar family, as I'm going to refer to it, is basically a pretty small body and a long wick. What this tells us is that price went really strongly in one direction and was able to come back pretty far, but further from the open than one of the doji candles. So a hammer candle is typically a bullish signal where the body of the candle is at the top and there's a really long wick going down. This can be a sign of a bullish reversal, but again, it's all context dependent. An inverted hammer is the opposite. The fat body is at the bottom and the wick is at the top. This is sometimes a bearish reversal. What's important with these pin bars is where they're at in terms of a trend. A hammer candle at the bottom of a trend signals potentially a bullish reversal. The same pattern at the top of an upward trend becomes a hanging man, a bearish reversal. Basically, anytime you see these really long wicks, that could be a sign of indecision, maybe a reversal. These are the kind of things we're looking for. Okay, so that was a brief overview of indecision candles, reversal candles. Now we're going to talk about momentum candles. As a general rule, if you don't see a big wick, it's a momentum candle. What momentum candles tell us is that there was a lot of buying or selling pressure. Marubozu candles are just one block. There's basically no wick at all. They can be bearish or bullish. That means buyers or sellers had a lot of control in that time frame. A long-bodied candle, meaning there's a really small wick, is also a really strong momentum sign. Generally, the smaller wicks you see, the stronger the momentum. The longer wicks you see, That's more indecision, maybe a reversal. So that's a quick overview of the candlestick types. Something else I want to touch on that's really important to understand. This idea of time frame consolidation. What I mean here is that different patterns consolidate into candles over a larger time frame. For example, if you were looking at the 5-minute time frame, if you see a strong bearish candle down, and then a doji, and then a strong bullish candle back up, that's a pretty strong reversal sign. If you were to see that same 15 minutes on a 15-minute chart, that's going to show as a pin bar candle with a long wick down. It might show as a doji. We want to keep this idea moving forward. There's a lot of pros and cons to trading different time frames, but one of the pros, or maybe a con, depending on how you look at it, is that when you're looking at larger time frames, you're seeing a lot of action consolidated. There's a lot more data in every candle. To that point, you also lose some nuance, but depending on your strategy, that may or may not matter. I say this to say, with a lot of candles, it's more impactful to see them on a larger time frame chart, like the day or the week even, than it is to see them on the minute chart. The minute chart is going to show you a ton of dojis, a ton of pin bars. It may or may not mean anything. If you see a doji or a really big pin bar on a daily or 4-hour candle, that's a bigger sign. This has been the basics of candlestick types. Just a reminder, we're going to go into a lot more detail in future videos about candlestick patterns, chart analysis, understanding support and resistance, and trending and consolidating markets. One candlestick will almost never tell you what you need to know, but when seen as part of the larger picture, it can tell you a lot about what price is doing. In the next video, we're going to move to talking about patterns with 2 candlesticks. My name's Andrew, and I hope this video brought you a ton of value. Click the link on the screen and let's go learn about a couple of basic candlestick patterns.